Hi, this is Bryce Waite with Citywide Home Mortgage, and I'm here to show you with high rates how we challenge that in a market with a solution. In this case, we're going to talk about temporary buydowns. A lot of lenders know what this is, some of you guys know what this is, but a lot of you don't know what this is, and that's why we're going to cover it. There's major options called 3-2-1, 2-1, and 1-0. There's more than that, but that's what we're going to cover today. What this means is when we make an offer on a house, I'm going to use, let's say, $500,000 purchase, you and your family are out shopping. This is the house price you guys want to get. You're nervous, you don't want to buy because rates are at 7%, 6.5%, because some war busted out or oil prices skyrocketed, whatever it is. This is a solution to get you and your family into an affordable home with a small risk to it in the future. So I'll break this down, a 3-2-1 buy down. So say we're offering a $500,000 house. It's all about the structure. Your agent and lender have to work as a team to structure this to make sure you get the offer and set plan that you and your family need to make this affordable. 3-2-1 means 3% off the first year. So let's say today rates are 6.5. You make an offer at $500K, but you ask for 20 grand back or 25 grand back in what's called seller concessions. It's another way of saying seller's paying your closing costs. We can use that money to do what's called a temporary buy down, which we're discussing now, and you get 3% off the current rate for the first year. So that 6.5 rate is now a 3.5 rate. It makes that payment change on $500K, we're gonna say roughly about $700 a month. That's a big difference for a family. This is a temporary fix for a long-term problem as we hope rates go down. But if you're a buyer and you're sitting there thinking, well, I'm gonna wait till rates drop. Well, this gives you a 3-year window for rates to drop, and it's better than renting. So that's why I like this program. The 2-1 is the same thing, but now it's 2% off. The 1-1 is 1% off the first year. So here's the downside. 3-2-1, 3% off the first year. After the first 12 months of payments, your payment will go up. That rate from a 3.5 will now go to a 4.5. So that payment goes up a little bit, but it's still temporarily lower than what the normal rate is. This is a 30-year fixed loan, so it's not gonna like a balloon payment that comes due or panicking or anything like that. If you bought a house today at that 6.5, that's what the payment's gonna be in 3 years. So it's not like you're in a bad position and you can't, like you're stuck. It's meant to refinance in that 3-year window, hoping and praying that there's no wars, oil prices come down, so we can get into a house and refinance in that window. But if not, you're still at your 30-year fixed. Worst case, it will not get worse than what you were quoted if you were just to buy a house normally today. This is the solution in an environment where you're scared to buy in high rates. This is a temporary fix, but it does work to make the payment affordable with some risk to it to time the market. That's all I got. If you guys have any questions or comments, please get them below. Myself and my team will reach out to you. Thank you.